So because this is an afternoon session, my challenge is to ensure that you still awake, and if not, just make a dua, Bismillah ma ahya wa amut. At least you can get some blessings in this session, inshallah. Within this 1.5 hours, I would like to touch on the topic given to me is on the essential Shariah ruling, points to ponder in Shariah audit practices. I was told that many of you are actually in internal audit, except for Encik Nasruddin, the CEO of Standard Chartered Sadiq. What I'm going to cover generally very quickly on the Shariah compliant framework to address some of the Shariah non-compliant risks. Because when we talk about Shariah audit, the main concern, the main approach is a risk-based approach. And when we talk about risk-based approach, definitely we have to understand what are the peculiar Shariah non-compliant risks which invoke all these aspects of risk. And what are the key considerations in Shariah audit, the processes, various approaches to Shariah audit, and preparing Shariah audit programs as well as report, just to give you just some overview. I would like to start by give you an overview of what does it mean by Shariah compliant. Okay? Before I start, can anyone define what is Shariah compliant with regards to Islamic finance? What do you understand by Shariah compliant? Anyone? Shariah compliant financial transactions. What do you understand? What captures first in your mind? Is it product?
It's a process of compliance.
Processes?
Compliance process.
Compliant processes? What else? Compliant process.
The compliance in regards to the Sharia law.
Oh, meaning that the process, the whole process.
Oh no, the internal controls.
Internal control.
In the process of a transaction process, what are the internal controls
Okay.
placed to ensure that the compliance is valid?
Are you internal auditors? You speak like one. Okay, that is part and parcel, right? Because I was expecting you because most of the time when I ask this question, the first that captures to your imagination is about the product. The product must be Shariah compliant. But of course, it's not just about product, as you correctly mentioned, it's the whole processes. That's why actually, interestingly, if you look from the historical perspective, in the case of Malaysia, Islamic banking in Malaysia started with a very right footing. Why I say that? Because from the very beginning when Islamic banking was introduced, officially in 1983, but the whole effort was started in 1974. Okay, when the Secretary General of OIC, who is our first Prime Minister, Tunku Abdul Rahman, initiated the idea to establish IDB, Islamic Development Bank, which came to reality in 1976. But in 1976, when Tunku Abdul Rahman signed an MOU with the King Faisal of Saudi, the whole idea of setting up IDB is to actually further encourage all the member countries to introduce Islamic banking. But out of all these Muslim countries, only Malaysia took the initiative. But only in 1980, a formal committee was established. That was when Prince Faisal, the son of King Faisal, came to Malaysia, did a negotiation again to reinforce what has been signed in 1976 with Tunku Abdul Rahman. At that time, he was no longer as Prime Minister. He was the President of PERKIM. And the whole idea of establishing Islamic banking came through PERKIM in Malaysia, and PERKIM basically mooted this idea to the then Prime Minister, Dr. Mahathir, and Dr. Mahathir established National Steering Committee led by Tunku Moha. And actually from the committee, there are 3 subcommittees including legal Sharia. The legal is Professor Ahmad Ibrahim. Sharia is one of the Mufti of Wilayah. It's clearly mentioned that if we were to establish Islamic banking, we have to ensure that the whole spectrum of Islamic banking must be Sharia compliant. It's not just about product, but the whole processes, meaning that Islamic banking must be in a holistic manner. That's why, if you notice, when Islamic Windows was introduced in 1983, okay, then only Islamic money market, okay, started to operate in 1994. Main reason is to ensure that it's not just about product at the forefront, okay, to the customer, but the manner how you manage your liquidity must also be Sharia compliant. Okay, so it has to be end to end. But of course, there are a lot of impediment, hurdles, weaknesses over time that are to be rectified. But what I want to emphasize here, this is one of the reasons why we have to ensure that everything must be Sharia compliant, because it's not just about product, but the whole spectrum of operation of Islamic banking. That's why when we talk about Sharia compliant, there are two levels of compliant process. The first is when you want to structure the product, okay, and just to sum up, okay, to summarize, okay, when I said the first level of compliance, this is normally the concern of many Islamic banks at the initial stage. Okay, they want to ensure that the product they are offering to the customers are complying to the Sharia. When I say complying to the Sharia, okay, I don't want to get into the debate of Sharia compliant versus Sharia based. For me, there's no such thing as that demarcation of Sharia compliant or Sharia based. Have you ever heard this demarcation? Debates? No? Yes? Yeah, some of you might have heard about this, because this is also a continuous debate in the industry. Okay, some with an idealistic point of view says that we have to come back to the original product of Islamic banking based on the original contract. But if we probe further, what does it mean by original contract? Okay, most of the time they will say that mudarabah musyarakah. But mudarabah musyarakah is not the original contract. In fact, most of the contract in muamalah, okay, are actually contracts which are there before, predate Islam, but the Prophet ﷺ tried to modify it, okay, by removing whatever prohibited element, okay, based on whatever injunction by God, as well as the objective of Sharia. Because the objective of Sharia, when it comes to muamalah, is to avoid any potential dispute. Okay, that's why when it comes to riba, it's very clear. There is a clear injunction in the Quran that you have to avoid riba. There are more than 13 verses, okay, that explicitly mention about riba. But when it comes to gharar, for example, uncertainties, this has not been deliberated clearly in the Quran, but it is mainly mentioned by the Prophet. Because when you talk about gharar, what is gharar? Uncertainties, okay? Uncertainties, which is actually the essence of Sharia contract, Sharia-based contract, is very much to avoid any potential dispute that will be or might be triggered, okay, when two parties entered into a contract. That's one of the reasons why the Prophet says you cannot sell something which is not yet exists. La tabi' ma laysa indak. It is not just simply follow the text literally, but you have to understand the spirit behind it. That's why the scholars, for example, Ibn Taymiyyah, when he actually explained what does it mean by la tabi' ma laysa indak, you cannot sell something which is not owned, it means that, okay, it is actually the issue of gharar, okay, uncertainties, wa mukhatara, and risk. Okay, these are two issues which is very much embedded in that transaction, because there might be a potential dispute. That is why some of the contracts are given an exemption. For example, salam, forward sales. It is given an exemption, meaning that you can enter into a sales contract where the good is not yet available. When it comes to salam, it's a forward sales, right? Okay, you sell something which is not yet available. But why did the Prophet endorse it? Of course, if you look from the text, the original text, because it has been practiced before. It was practiced before Islam, okay, and it caused a lot of problems and difficulties for especially those who are in agricultural sector, because they normally engage into this kind of transaction. Okay, they sell something in advance so that they can get the capital upfront, because this is where the agricultural sectors Okay, because they need the capital in the beginning. Okay, that's why when the Prophet was approached by the companions, okay, the Arabs of Medina at that time, because some of these people feel uneasy with the statement of the Prophet before, that you cannot sell something which does not yet exist. So they said that we have been, transacting this form of transaction before. They sell dates, okay, in advance, meaning that they get the money, they get the capital today, but the delivery only happens in future. That's why the Prophet mentioned, إِذَا أَسْلَفَ فَلْيُسْلِفِ كَيْلٍ مَعْلُومٍ وَوَزْنٍ مَعْلُومٍ إِلَى أَجَلٍ مَعْلُومٍ. If you enter into a forward sales contract, then you have to fulfill 3 conditions. Okay, the type of quantity, the quantity must be specified, the quality must be specified, and the terms of deferment must be clearly specified. Why this condition imposed? Because of the issue of gharar. You want to ensure there is no uncertainty of delivery. Because if you have all these conditions, because in a sales contract, the seller must be more responsible, must assume liability in order to justify your profit. In other words, if, for example, let's say I sell you the dates that is to be delivered in 9 months' time, okay, which has been clearly specified what type of dates, how much, okay, the quantity, the weight, as well as terms of deferment, when is to be delivered, how to be delivered. Everything has been cleared. So after 9 months, if the person cannot deliver, then as a seller who already promised to sell, they have to take liability. Because liability in Islam is one of the justification for profit that you earned. Al-ghurum bil-ghunum, or al-ghunmu bil-ghurmi. Okay, so no risk, no gain. Al-kharaj bil-daman. Liability, returns come with liability. Okay, so these are the fundamentals. So that's why when you talk about product, okay, regardless whether they were originated from conventional product, okay, it doesn't matter whether you want to replicate it or whether you want to copy the conventional. The most important thing, you copy the economic effect of it, but you remove whatever prohibited element. Okay, so what are the main prohibited element? These are the 3 major prohibited element: riba, gharar, as well as whatever element of injustices. Okay, either derived from gambling, or non-transparent transaction, or hidden charges. That's why in Islamic banking, every charges that you impose to customers must be justified. Okay, you cannot just simply charge whatever conventional is charging. Okay, sometimes there is always a conflict between you want to increase the fee income base of the institution, at the same time, okay, you have this Shariah constraint. Okay, for example, in conventional you can charge early settlement fees, okay, or exit fee. Can Islamic banking charge that early settlement? Yes? Okay, you cannot impose it direct, but with the IBRA, with the rebate that you are, entitled to give or not to give to the customer, you can reduce that amount. But you cannot simply charge like a conventional way of charging. You impose that fees, upfront to the customer. Okay, so this is some of the example. So if you remove this, then only that contract will be deemed as Islamic contract, and whether it is a nominate contract or non-nominate contract is not something which is a concern, as long as it's a Sharia compliant. Okay, meaning that contracts from the Islamic perspective can be unqud musamma, nominate contract which are known in the past, which has been deliberated in the past by the scholars, for example of contract which are known, which has been known in the Islamic jurisprudence. Qard. What else? Qard is a loan contract. What else? Murabaha, musyarakah, mudarabah, ijarah, all these are nominate contract, meaning that the scholars in the past have been deliberating on these contracts in details. What are the characteristics and what are the specific objectives to be achieved and so on. Okay, another type of contract is non-nominate contract. These are new contracts which has never been discussed in the past. Okay, only introduced in our modern days. Okay, example. Huh? Sukuk is not a contract. Sukuk is a certificate. Sukuk is just simply a certificate, whether it is based on murabah, musyarakah, mudarabah, and that is a contract, which is the underlying. Okay? But what are the examples of uqud ghair musamma, non-nominate contract? Anyone from Shariah department? We have few people from Shariah department here. The most popular one in the banking sector today. Huh? Huh? Commodity murabah, tawarruk to state asset is a uqud musamma. It has been deliberated in the past. Musyarakah mutanakisah, diminishing partnership. Okay, it has never been debated in the past. It's a combination of various contracts together. Ijarah muntahiyah bitamlik, okay, which becoming more, which has become a new contentious contract. Okay, after last year, OICF Academy came up with a resolution that, okay, if you sell something, you cannot lease back. Okay, but most of the sukuk ijarah muntahiyah bitamlik, this is the essence. Okay, the characteristics of ijarah muntahiyah bitamlik. You sell to SPV, and then SPV will sell to the investors, and then you are going to lease back. At the end of the period, you are going to buy back. Okay, so according to OICF Academy, this is something which is a resemblance the buy on INA. But this is another topic that we are going to discuss later, in different forum. Okay, but this is only the first level of compliance. The second level of compliance is regarding the whole operation. Okay, meaning that it's not just sufficient for you to focus on the product, contracts. This is only one part of it. But however, I can say to you that when it comes to Shariah review and audit, most of the time, I would say 60% of the findings, this is based on my personal observation, not academic findings. Okay, based on my audit of 3 Islamic banks. Okay, of course, one of my own. Okay, I involved with the internal auditors. I'm training them direct, and 2 others are because I was engaged by PricewaterhouseCoopers, okay, to do some Shariah audit on 2 other Islamic banks, which I cannot disclose to you which bank. Okay, but most of the findings, okay, 60% I would say is on the contractual aspects. Shariah compliant issues normally invoked in the documentation. Okay, and then the 40% is more on the operation. When it comes to operation, it covers all aspects of operation, such as investment activities, okay, the process of rectifying and purifying, which is something that must be done on regular basis. Okay, do you agree? Rectifying and purifying. Okay, especially those who have this asset management division or fund management. Okay, sometimes a portfolio comprising of Shariah compliant securities, but turn out to be non-Shariah compliant. Okay, and how do you rectify it? And then to a certain extent, you have to purify it. Okay, especially the dividend. It depends. If you go to the SC guideline on how to deal with the non-Shariah compliant shares, then there are 2 different period. If, for example, the shares it's either on the date of announcement or after the date of announcement. Okay, if you dispose the shares on the date of announcement, for example, then you don't have to clean your dividend or whatever capital gain, because that is your right. But if you only realize that in your portfolio it comprises of securities which non-Shariah compliant, after it has been announced, for example, 6 months ago, okay, then the dividend need to be purified, and whatever capital gain need to be purified as well. Okay, but if, for example, at the point on announcement date, the share price is lower than the cost of investment, Okay, meaning that, for example, at the point when the announcement was made, the share price is RM2.50. But when you invest, it is at RM2. Okay, then that is okay. You can dispose immediately. But what happens if it is RM1.50 on the date of announcement? Okay, while your cost of investment is RM2 per unit. Okay, can you dispose immediately or should you, wait? Under Securities Commission, you can wait until the price achieved at par value of the cost of investment before you dispose. Whatever dividend received, you can use to expedite the process of disposal. Okay, this is some rulings issued by the Shariah Advisory Council of Securities Commission based on ijtihad. Okay, but of course based on clear evidence in the Quran as well, because in the Quran Allah mentioned wa in tubtum falakum ru'usu amwalikum la tadhlimun wa la tudhlamun. If you repent of doing something which is evil, in this regard is riba, then you can just take back your principal, not the interest portion. Okay, so based on this, I said that, okay, fine, we have to claw back our principal amount, but not the returns, dividend. All right. Contract execution, this is also another, potential Sharia non-compliant. Okay, especially with regards to the new pronouncement by Bank Negara, okay, BBA, okay, asset sales agreement and asset purchase agreement, because the contract execution will determine whether the whole transaction is Sharia compliant or not. Okay, for example, in BBA, okay. Which contract that need to be signed first? Asset sales agreement or asset purchase agreement? It depends, right? It depends who have the assets. Okay. Can you see from the back? Okay. Let's say in the personal financing or corporate finance using BBA. Okay. Normally, the commercial terms used is ainah lah. Okay. It depends. If the asset belongs to the bank, then it is known as ainah. If the asset belongs to the customer, it is known as BBA, Baik Berthaman Ajil. But actually, BBA and ainah in Malaysia is still the same. Okay. It's actually ainah-based transaction. So let's say bank sell asset to the customer by signing asset sales agreement, and then the customer will sell back by signing asset purchase agreement. What happens if the sequence is not followed? By right, this is the first and this is second. What happens if APA is signed first before signing ASA? Remember, this is a court case. What happened? Okay. Yes?
You are selling something which you do not know.
Remember, if you sign asset purchase agreement first, prior to asset sales agreement, what the customer is selling is nothing. Okay, because by right, bank is supposed to transfer the goods to the customer. Okay, and then the customer will sell back these goods to the bank. Okay, but if you sign asset purchase agreement first, then what you are selling is nothing. Okay, the problem is bank has disbursed the money to the client. Okay, correct? And then the customer need to pay the bank on installment basis. Cost plus profit. Okay. Now, what is the status of the contract? Remember, in doing audit, you have to understand what is the Sharia issues first. Okay? Before you can rectify, before you can recommend for rectification. Because as an auditor, you are not having the liberty to decide whether it's a Sharia compliant or non-Sharia compliant on how to treat and what to treat. It is not your call. Okay, you are just recommending to the management or to the Sharia Advisory Council, okay, to the Sharia Committee basically, right? So here, what is the problem if you sign asset purchase agreement first? Okay, the contract of sales now becomes void or voidable? Void. Okay, batil. Okay, not fasid. Okay, void means the contract is void, batil. Okay, so if the contract is no longer sales because there is no asset, okay, what does it mean by this? The payment made to the bank. Okay, then the payment here becomes riba. Why? Because if you sign this, then this is also not valid. What the bank actually disburse is merely loan. Okay? It's no longer sales. Even though you call it BBA, but the consideration in Islamic ruling when it comes to Shariah transaction is on the substance more than the form. Al-ibrah fil uqud lil maqasid wal ma'ani la li alfaz wal mabani. Consideration of a Sharia contract is not on the form or the structure, but more on the substance and the objective. If the substance is loan, why loan? Because there's no asset. What you disburse is just pure money. Then it becomes loan. Okay? So if it is a loan, then you have to follow loan condition or rules. Okay? Because it's qard. In loan condition, what is the primary rules? No excess. Okay, you can just disburse and then you can only expect your principal amount. Okay, so whatever more than the principal becomes riba, right? So that is the problem. But how to rectify it? How to rectify? Okay, there are several situations. Normally it's two situations. First, you do audit on the transaction that has been long completed. Yeah, it has been completed, but because you were based on sampling, okay, the transaction for the past 2 years, and you get all this transaction which has completed. Okay, that is one scenario. The second scenario, if the contract is still ongoing. Right? So how to treat these two different scenarios? First scenario, let's say it is long completed, meaning that you have already earned and recognized this profit as your income. Okay? How do you do? Huh? You have to claw back their profit, and then how do you treat this profit then? Huh? Donate to charity? No. Yes, purify. How to purify? How to purify? Channel to charity? Yes? How many say channel to charity? Raise your hand. Channel to charity. Any other thoughts besides channeling to charity? You have to return to the customer because this is aklul mal bil batil. You are consuming other people's wealth in unjust manner, because when you charge person something which is above than what is allowed in Sharia, this excess is no longer your money. Okay? In order for you to repent, not only repent to God, but you must also return this money to the customer. Okay? And that is the first scenario. But what happens if the second scenario? The contract is still ongoing. Okay, how to adjust? Huh?
Treat the interest or the income as part of the principal for future payment.
Okay. Now you have already accumulated. It's not yet finished. It's not yet completed. You are accumulating principal plus profit. Or perhaps, okay, in accounting point of view, you are accumulating the profit portion first. Okay, okay. Put aside the accounting treatment, but the issue is, from the Sharia point of view now, how to treat this scenario? First, you have to, okay, re-execute the whole contract with the customer. Okay, you don't have any other choice unless you just still charge and then you earn profit and then you have to return to the customer. But now you can still save, okay, the bank's operation by basically re-executing the whole contracts again. Okay, that is a two scenario.
That is if the customer agrees to sign again lah. So if he doesn't want to agree, then we have to refund back to...
Yeah, because this is a bilateral contract. Bilateral contract means it cannot be unilaterally, okay, agreeable. Okay, it must have a consent from your customer. That's why this kind of incidents is deemed to be high risk. Because when I said high risk, it invoke legal risk, okay, on top of the Sharia risk. It also invoke reputational risk. So you have to be very careful. Legal, why? Because this is what triggers Bank Negara to come up with that ruling on BBA. Okay, the first case on Tan Sri Khalid versus Bank Islam, and then the second case on Dato' Adnan versus RHB. Okay, Tan Sri Khalid argued on this, okay, on this sequence. He said that everything is pre-signed. Okay, therefore there is no, guarantee that I'm signing ASA first, then only signing APA. So everything is pre-signed, then when the sequence is not fulfilled, then the whole transaction becomes void. Okay? Unlike Tan Sri Khalid, Dato' Adnan, okay, argued in different manner. He said that, okay, the sequence, yes, because bank learned from the mistake of Bank Islam by having stamp on the time. Okay, so you can prove that it is sequence. But remember in Sharia Advisory Council's ruling, even in 2007 on Bay'ul Inah, the updated version on resolution, okay, it's clearly mentioned that Bay'ul Inah, there must not be any interconditionality. Okay, so when you look into ASA and APA, the issue of interconditionality is very apparent. Okay, you check. Okay, I'm sure before it was, imposed. The regulation on Bay'ul Inah was imposed by Bank Negara. I think most of the banks have these problems because, for example, at AFFIN, we instructed our banks to immediately, the auditor to have a special examination or audit on the contracts. I would say that 100% of the contracts having this interconditionality. So this is also some of the concern, all right? Contract execution, okay, risk management, okay, whatever, yes.
Sorry, but let's say in the event that they don't have the time, it's just same day, would that also raise ambiguity?
Yes, it will definitely. First, you have to understand, when you do audit and when you ensure that there must be a proper control in place, because you want to avoid any potential risk. The biggest risk that you have to concern is when it comes to legal. Of course, Sharia is fundamental, okay? But, as from the bank's point of view, the commercial point of view, legal is something which is, a serious matter. So if you don't have any evidence to show there is a sequence taking place, then it's difficult for you to defend your case in the court. Okay, this is what happened to many cases. Okay, in the court, for your information, 85% of the cases in Mahkamah Tinggi Kuala Lumpur alone is on INAH and BBA. Out of the sample, about 6,000 plus cases. That was when we did research in 2011. Okay, so you can just imagine, most of the cases from 2005 onwards, it's on the Sharia issues. Okay, it's not, something, because most of the time people cannot pay their debt. That triggers the whole dispute. Okay, but now people are becoming more, I would say, creative on how not to pay their debt. Okay, using Sharia justification not to pay their debt. Okay, that's why if you look at the summary judgment of Dato' Rohana, the High Court judge then, when she passed the initial summary judgment on Tan Sri Khalid versus Bank Islam, she made a very interesting remark. She said that, she actually, her ruling, the judgment is for Bank Islam. Okay, but of course she made a remark saying that it's just like make an analogy, it's just like you had a dinner in the restaurant. After you completed the dinner, you consume everything, and then when it comes to payment, you say that, I'm sorry, I don't want to pay because the food that you served to me is haram food. Okay? So that's why, according to Datuk Rana, no, it is not right because you have already consumed it, therefore you have to pay for whatever food that you have consumed. Similarly, this loan or this financing has been consumed by the parties, therefore you have to pay. Okay? But of course, that summary judgment was, further challenged by Tan Sri Khalid, lawyer, of course not Tan Sri Khalid himself, lawyer who normally becomes the culprit in coming up with all these creative arguments and so on. Right? So because of that, you have to be very careful, okay, when it comes, especially with regards to resolution passed by Negara. Okay? Yes.
That's my question. If that case happened at your bank and you are the Shariah committee, the auditor will come to you, will you actually ask them to go back to the customer to
Yes. Yeah.
If there's one case, if there's few hundred cases,
Or practice.
due to the reputational risk or for whatever other reason, would you still?
Okay, I can give you two scenarios. Okay, two issues. When it comes to this matter, then it's difficult for you to rectify because you have to re-execute the contract. There's no two ways about it. But there was a case when you are imposing a fees which is unjustified. Okay, and we decided that this is not AFFIN. There's another bank. Okay, we recommended the Shariah committee saying that this fees is not justifiable. Okay, basically because they are charging exit fees, which is against not only SAC's ruling but also the Shariah committee's ruling. Because remember, when you do audit, you are not doing audit based on your own presumption. You have to have source of reference. Okay, what is your main source of reference? Of course, the first and foremost is the bank's Shariah committee's decision. Okay, because you are doing Shariah audit, because you are not doing Shariah review. Okay, Shariah audit is independent. You are just based on whatever has been decided by the Shariah committee. On top of that is the Shariah Advisory Council's ruling, because this is a regulatory requirement. So when you look into all this regulation, you found that banks is actually doing something which is not right. Okay, so the fees that you are imposing to the customers, okay, we recommend that it has to be rectified by clawback, but by right, under Mazhab Maliki, you must actually ask for forgiveness from the customer or from the person who you take the money from. Okay, but because we see there is an issue of reputation, okay, therefore the Shariah committee said, never mind, we just rectify, but no need to go and send the letter of apology, okay, to the customer. Otherwise, it can create a lot more harm to the bank. This is, the judgment made by the Shariah committee of that particular bank, right? Okay, so what is actually Shariah non-compliant risk? If under IFSB, it is defined as risk that arises from IFI's failure to comply with the Shariah rules and principles determined by the Shariah board of the IFIs or the relevant body in the jurisdiction in which the IFIs operate. That's why it's very clear. Okay, you as a Shariah auditor, okay, you are based on whatever decision determined by a higher authority. In the context of Islamic bank, then the Shariah committee's decision or relevant bodies.